Welcome to Wall Street Sizing Up. We're glad you found the channel today. Number one, we're talking about smart money versus the dumb money. 2, what hedge fund bros don't want you to know. Trade secrets. And 3, 2 stocks on a Japanese game show gone badass crazy. Let's go. Welcome back to the Wall Street Sizing Up channel. I get emails all the time. I get friends all the time asking about smart money and the dumb money, and that's what we're going to talk about today. Here is an article from Investopedia. We all use it. It's good. When you Google smart versus dumb money, this is what comes up. So let's just talk about it. Big institutional investors, aka hedge funds, aka mutual funds, aka big investment managers. They're labeled smart money. Why? These investors have somewhat of an unfair advantage over your run-of-the-mill individual investor, armed with teams of experienced investment analysts. Smart money investors can evaluate exactly what's going on in the market, allowing them to make more informed investment decisions. I completely agree. They have more resources than us. They have more human resources. They have more tech. They have more modeling. They have more TA analysis. They got all that stuff. Every one of them. From a $100 million hedge fund all the way up to a $100 billion hedge fund. They got that. But they're not smarter. They are not smarter than you, not smarter than me, not smarter than Main Street. What they have is, again, more resources. And here's the number one thing they got. They're more well connected. We see it on the channel all the time. They have to file 13D and 13G filings with the SEC if they take a high conviction buy. That's 5% or more of a position in any stock or company. They have to file within 10 days. That's what we bring you on the channel. We try to bring you the ones that haven't already pumped. But we like to show that occasionally. Because if they filed and let's say they filed 10 days later, but 3 days after they made that trade and that stock pumps 30-40%, do you think they knew something? And that's what I'm telling you. They knew something. Was their back end? Could have been. Was it probably their LinkedIn Lion connections? That's what I'm talking about. What we're getting at is their insider trading. Yes. Is it all over the place? Yes. Does everyone do it? No. But some of the stocks that we see and some of the filings that we see, and we see that pump 2, 3, 4, 5 days after they've gotten into stock, wink, wink, nod, nod, they knew something. They got on that Signal encryption app. They hit the Discord hard, right? They got on that Telegram private chat, VPN peer-to-peer. That's what they hit. That's it. Again, not smarter, just more well-connected. And here's a trade secret that they will not tell you, and the wealthy sometimes won't tell you. When you're young, don't diversify, focus. I saw a tweet by Marc Cuban one time. He talked about this a little bit. Yeah, diversification, that's for when you're wealthy, not from when you're trying to build wealth. You need to focus.
Diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing.
Focus on a sector. Focus on a sector that makes your pants dance. Focus on a sector that makes that snake in your jeans want to come out.
Oh my God.
Is it tech? Is it biotech? Is it consumer products? Whatever it may be. Then you find 2 or 3 stocks in that sector that you really like. Analyze that.
Feel better?
Yeah, I do.
You get to know the management. You listen to the podcast of the CEO and the COOs. You get on the earnings call.
So we are going to screw this guy so badly that it will be fun to watch.
Robinhood alerts you to the earnings call. Listen to them. Heck, some of them you might even ask your own question. Get in on the message boards. Go hard in the paint there. Ask questions. Know what the trading range is. Know what the volume of shares that are traded per day. What the float is. Understand the news of the day, the macro, but also understand the catalyst for that stock. And then once you understand all of that, you're just like a hedge fund bro. And then this is what they don't tell you. You got to go heavy. You got to size up. Hence the name, Wall Street sizing up. You got to trade with size. I'm not talking about hundreds of shares. I'm talking about thousands of shares. Now, I get it. If you're starting with a small account, let's just say that's $10,000. I'm not saying blow your whole load on one trade, but if you put in 10,000 and it goes the wrong way, that 10,000 is not at risk, right? If this trade starts to go to the downside and you're down 2, 3, 4, 5%, you got to cut your losses and move on. Wait to trade another day. But if it starts to move up 2, 4, 5, 10%, you just made $1,000. $1,000 on 10,000. That's how you build your trading account. And one day you'll be able to do $100,000, $200,000 positions. Instead of 1,000 or 2,000, you're making 20,000. Real money.
All you care about is money.
Again, not investment advice, but that's how I see great day traders, hedge fund bros. That's how they run $250 million books. The same way I just explained. You got to trade heavy. Go hard at the paint.
I go hard in them paint.
They just know more and they trade heavy. And that brings us to the next one, the SEC. Let's go to the article here. The government agency responsible, the SEC, responsible for policing Wall Street, brought the fewest number of insider trading cases in decades, according to the most recent available data, 2019. The decline came before COVID. The SEC only brought 32 investment trading enforcement actions in 2019. That's it. The guy that runs the SEC is Jay Clayton. I actually like Jay Clayton. He's done some really, really good things. It says here, insider trading enforcement made up less than 4% of the commission's enforcement work that year, a decades-long low. And while insider trading can be difficult to detect, there's no evidence that 2019 was simply a more honest year. In fact, I would tell you it's probably not. Here's Jay Clayton. This is why I like him. We largely like to focus on protecting individual investors from shady advisors, Ponzi schemes, and con artists. I'm on board with that. Clayton likes to say he advocates on behalf of Main Street investors and Mr. and Mrs. 401k. I get it. But on this channel, we are seeing far more high conviction buys that are very close. In fact, we just came across one, I think last week, that an investment manager is sitting on the board of a stock that he has a high conviction buy-in. Now you're telling me he ain't got some wink, wink, nod. He's sitting in the boardroom with the CEO. He could pull him aside. Sidebar, please.
I'm not going to waste a minute regretting anything I've done.
You'll be regretting it for the next 25 years if you don't give me your answer right now.
We've been focused on more black and white wrongdoing. When the SEC aggressively polices insider trading, it does deter illegal activity. The executives see a major figure like a Martha Stewart going to jail.
Cheer up, Martha. There's no need to be lonely in prison. All you've got to do is join one of your prison's many tight-knit gangs. And you have plenty to choose from. There's the skinheads. You could join up with them. There's the Latin Kings. That's a fierce group.
I think they cut back on that insider trading, that signal encryption, that VPN peer-to-peer, if you would. Conversely, if enforcement drops, we should then observe more insider trading in years to come, and that's what I think that we're seeing now. I think that we're seeing a lot more. We are seeing on the channel through 13D and 13G SEC filings that have to be followed by law. We're seeing how are hedge funds getting in 2, 3, 4, 5 days before a 20, 30, 40, 50% pump. Where's the SEC? You're just going to tell me 32 is all they've seen? I've made close to 15, 16 videos now, and I've probably seen 10, if not 20. And off to the stocks we go. First one is VAPO, Vapotherm. You can see I have a huge position of one share. Vapotherm is a medical technology company which engages in the development and commercialization of medical devices for patients suffering from respiratory distress. Doing God's work. Bam! $750 million market cap, trades almost 2 million shares a day. The stock can't find a home. Swerving all over the road on the weekly, maybe some dark arts. But then, bam, you see what I see. Partying a little too hard, hit that cocaine, bam.
We're gonna eat that salsa for breakfast.
Crash, overdose. That's right. And that happens. And we see it. Now, the man who got into this stock, and he got in, what I'm seeing, the 14th. So he got in right about here. Right there. So he got in after the crash. But did he really? Actually, Mr. Zach Miller of Pairing Global Management runs a $350 million hedge fund, started in 2018, fairly new. Here he goes. He got in late 2019, December of 2019. He probably rode this up. And I bet he got out of his position. And then I bet he got back in. Because that's exactly what happened. So right here, he buys just under 1 million shares. He owns 8.6% of VAPO. And here's the key. This is why he's highly convicted. This is why you watch this channel. The portfolio weight is 17%. 17% of his entire portfolio is invested in this one stock. He's highly convicted. That's why I'm telling you. The vert ramp, he made some money. I believe it was 114%. Probably was in some position here, but had probably gotten out. Then he just goes ahead and buys more. What does he know that we don't? What does he know that Wall Street doesn't? I have seen some VAPOs, but not someone who's highly convicted as Zach Miller at Pairing Global. That being said, I'm giving it 3 stars. 3 stars. He knows something. Next up, PACB. PACB, a lot of smoke and fire around this one. You can see it is a budget stock. This comes from our friend Kathy Wood over at ARK Investments. This is not a high conviction stock. It's one that she talks about a lot. It's one that is in, I believe, 2 of her funds. Never heard of Kathy Wood. She's one of the best investment managers out there. I believe they run 4 ETFs as well. ABDG, whatever it is. Look them up. Google them. They've got 4 ETFs, all tech, basically tech focused. Here's what they don't tell you. One, it's almost $1 billion market cap. It trades 4 million shares a day. But what they're doing, truly doing God's work, and they're bringing the cost down. They optimized human genomes.
You are who you are in large part because of your genome.
And plan to do it for under $1,000 in less than 24 months. That means they're mapping your human genome, and it's only going to cost $1,000 or less. And they're going to do this in under 2 years. They announced this. The HGH sugar pump right here, bam. I mean, that is some serious pump of logic. It pumped up from 360 to about, what are we at now, 630? Yeah, this is one of those stocks that you just waited outside the GNC for the opening, and bam, went inside and got itself some protein.
Para de mexer, moço.
I love it. I love Kathy Wood. I think she's great. I give this a 4 stars because it's what I see is the future, and not only doing God's work, but doing God's work in an inexpensive way. Again, not a high conviction buy. I would give this 4 stars though. A lot of smoke, which means there's a lot of fire, a lot of kinetic energy around this stock, not just Kathy, but others as well. 4 stars. Last but not least, let me go full screen for this one. Listen to me, big sells this week. Shutterstock is one. SSTK, over $100 million in stock was sold just this week. Sprout Social, SPT, again SPT, over $50 million in stock has been sold since the first of the year. Again, $50 million in stock has been sold since the first of the year. Saw some more selling this week. So watch out. Again, selling, not buying. Last but not least, Intercept Pharmaceuticals. That is ICPT. Over $120 million in stock has been sold since May by management or insiders. All these stocks have been management or insiders. They know something, and they're dumping. They're getting out. That being said, I'm going to thank you guys for joining the channels. Please like or subscribe so you can find out where the hedge fund big money's rolling to. With that said, watch your six, go hard in the paint. We'll see you next time. Thanks again.